Okay, guys, welcome once again. And today we're going to uh, learn about the market maker moves. The market maker moves. Well, one has to know that the market doesn't move on its own will, it just doesn't move on its own. But there is some big guys who drives the market. Banks uh, and some big companies who really put a lot of money in the market. Uh, so these guys, they make the market move. So we call them the market makers. Okay, when they place their trades, these people they leave some certain positions in uh, they leave some marks on the market so that they will take another trade so that they know where to reach on the market. These are some things that drives them. There are certain things that make the market maker move the way they do. Okay, one is to understand why the market makers did this movement so that you trade along with them, so that you become a profitable trader. You need to know why they made this kind of a move, why they made this kind of a downward or upward move. You need to know that. And for you to know that, you have to know how they trade and what they look for in their trading so that you go along with them. You need to think like a market maker for you to be profitable. Otherwise, you don't just think that the market is going to move this way, then you take a trade that way. No, you don't do that. There is a lot of studying that you need to do, and you need to be patient, you need to be disciplined so that you move along with the market maker. Well, the market makers, what they do, they take advantage of your indiscipline, they take advantage of your impatience, and that's how you lose money. That's how you lose money. That's how you lose money. Okay, so this is what you have to know as as what the market makers do. Okay, the first thing that you need to know is that they use order blocks. They use order blocks. That's the first thing. Trade along with the market makers. They use order blocks. They use fair value gaps too. They use the discount and the premium, and they also use uh, they also use they follow liquidity. Yes, they follow liquidity. Liquidity. Yes, they also do liquidity runs. These guys. So you need to know and understand this and why they do this. Okay, so we are going to go straight away into order blocks. Then we go into fair value gaps, we go into discount and premium. You need to understand these things. Okay, so let's go again to our chart. This is the Euro USD chart. What is an order block? What is an order block? By the way, there are many different types of order blocks. There are many different types of order blocks. There is what we call a bearish order block. There is what we call a bullish order block. And as the name sounds, it simply implicates that if it is a bullish order block, it means that the price will be pushed in a bullish side, into the bullish side. And if it is a bearish order block, price is being moved in a bearish order block, in a bearish side. Well, okay, this is an hourly chart. This is an hourly chart of Euro USD. Okay, and this is what we want to identify some order blocks here, right? What is a bearish order block? A bearish order block is the last up candle in a downward move. The last up candle in a downward move. Price usually come back to that level and sell big time. For example, as you can see, price took this it took these levels here. Oh, let me use a trend line. Well, okay, price used it took out these laws here, and it trade lower this side, which means we are now anticipating it trade lower. And when it came back to this to these laws when it came back to our high, in fact, not to the lows, to our highs, it didn't take the highest part. It didn't take these highs here. It didn't take these highs here. It didn't take these highs. Right. So we are now expecting price to go down. We are now expecting price to sell. And as you can see on this chart, on this day was an order block that price respected. We said a bearish order block is the last up candle before the impulse move. This was the move here, the downward move here. This was the move. Price moved downwards strongly here. Price moved downwards. Well, okay. Where was our last up candle? Our last up candle was this one here. This was our last up candle. This was our last up candle. That's what we call an order block. That's what we call a bearish order block. Our last up candle, this one. That's our last up candle. And see what price did to that, our last up candle. It came back and it didn't take the high, but it respected that order block. It respected that bullish, that bearish order block. And the price started moving downwards, and it sold big time. It sold big time. All this move. This is how you trade order blocks. Okay, order blocks, they are there even on the daily chart, even on the weekly chart, even on the last time I gave a signal of a sell signal on Euro USD, and this was our target. This was our target. If you can go to the signal group, you can see that we gave a signal, a sell signal on Euro USD, and it sold up to our level that we anticipated. Well, it was somewhere around here. Yes, this is where price was, and that was our entry point. So we sold from here. That was our entry, and we sold up to this order block here. This is our This was our target. This one, um this red candle here was our target. We knew that price would come down there and it would bounce on that order block. So we can as well see the the bullish order blocks as well. We can as well see the bullish order blocks as well. Well, okay, this is a setup here. Okay, there are a lot of objects. Let me remove some of them. Some of them, they are small time frame targets and well, okay, we are saying here this was our impulse move. Our impulse move, taking out these lows here, these highs, in fact, not lows, these highs, these ones, they were taken out. They were taken out here. So this one is our impulse move. This one, it is our impulse move. This one, and we are expecting price to come back and respect this this order block, this bullish order block here that I painted paper. Let me delete these things. Oh my god, I painted it purple. I painted it purple. Right, this is our candle, our down candle. So we are expecting price to bounce on this candle, and then it goes up to buy to this target. This is 1.29827, something like that. That's our target. Yes, that's our target. So we are anticipating that price can respect this order block here, then we buy to that level. So in short, this is a bearish order block and as well as a bullish order block. There are many types of order blocks that you might need to know. I was just showing you the basic. There are a lot more. And okay, see you in the next video. We'll share about fair value gaps and as well as other order block types.